Hey there, this is Mike Durr, Kingwood mortgage guy, and I am not here with Joe Salas today. God bless him. Joe evidently has got a case of the coronavirus. So I want all those people out there that love Joe to pray for him and just wish him to get well fast because I'm going to miss him today. And anyway, so we're going to have a show today, and gosh, I don't know what it's going to look like. I've got some information here. I think it's good information. We cater specifically to first-time home buyers or buyers that are in the housing market, particularly in the Houston metro area. But this information might be good for all of you. And so what I'm going to do is I'm going to get right with my presentation. I may be finished in 10 minutes or 5 minutes for that matter, because I tend to talk fast. But I'm going to go ahead and get started on that. But I hope everybody's doing well today, and let's just get into it. Still got Joe's picture on there because he's my partner. But this is basically what we're going to cover today. We're going to do a little humor stuff. We're going to talk about the grants, the heroes, the first-time home buyers, and the public service people that I have a specific program for. We're also going to talk about credit and one mistake. I'm going to look at a couple's credit also just to show you guys some stuff. Buying homes. There's a couple of articles out there that are called the biggest contraction since whatever. And I'll share that with you and my opinion of that. Forecast, appreciation slowing. Well, guess what? If you hadn't been in the real estate market for a while, you would know that, but it's pretty dramatic. I'm going to give you what the interest rates are today. We're going to talk about, what is that one? Buyers balk at home builders. We'll talk about the lock and shop, and I also want to introduce to you today a platform that we are kind of, I guess, sponsoring, if you will. It's called HomeBot, and I'm going to just talk about HomeBot real quick. HomeBot is an engagement platform that provides our clients with the best tips, tricks, advice on how to track and build their home equity while saving money. You can even get personalized information like calculations, market data, refinancing scenarios, and much more to empower you to make educated decisions. HomeBot is a dynamic financial dashboard for the home that empowers homeowners to build wealth with the largest asset that you may ever own. I mean, you may not have as much money as the value of your house. HomeBot offers real-time market reports for buyers that are looking to purchase a home as well. The Market Explorer allows people to track appreciating neighborhoods and monitor the market value in their area. This function allows users to look at their home more as an investment than just a large purchase. From here, there are custom funnels where prospects can get pre-qualified, look at average price points in markets, and reach out to the lender or realtor that sponsored it. HomeBot keeps past clients engaged, driving client retention and more transactions in the future. That's why I'm involved. Guess what? It doesn't cost anything. If you have any interest in being able to access this platform, you can simply reach out to Mike Durr. You can call the number that's on your screen, the 281-348-9899, or you can email me at mike@mortgageguys.pro. All right, so there's that. I guess that's a shameless commercial, but I think it's something that a lot of people are going to like. But let's just move on. So my cartoon today said, this is Hooves and Horns. I guess this is by a guy that's A.W. Irwin. I don't know where it is shown, this cartoon, but it says, a runoff election sounds good to me. I wish we'd run them all off. And I kind of get that. And I really debated whether I was going to read this particular thing here, but I think I'm going to go for it. Gosh, I'm going to stir up the woods a little bit. Don't get mad at me. This is not me saying these things. This is me repeating what one of the local senators from Louisiana has said. Senator named John Kennedy. I've listened to this guy, and I think he's pretty funny. I think he's smart. So this is Senator John Kennedy on parking lots and crackheads. These are recent quotes. So first of all, I'm John Kennedy, not that John Kennedy. I'm the other John Kennedy, the Republican senator representing the great state of Louisiana. Permit me to tell you what I believe. I believe America was founded by geniuses, but is now run by idiots. I believe you can't fix incompetence, but you can vote them out of office. When was the last time you heard of anyone trying to sneak into China? America is so great that people who hate it refuse to leave it. I don't like to brag about the expensive places I've been to, but this morning I went to the gas station. I believe exercise makes you look better naked, but so does alcohol. Welfare should be a bridge, not a parking lot. Weakness invites the wolves. You must arm for peace. Free and fries to friends. If government tells you not to buy a gun, buy two. I believe if you hate police officers, the next time you're in trouble, call a crackhead. Here's a free tip. Cops will leave you alone if you don't do stupid things. I believe we need an election day, not an election month. I believe you should be able to prove who you say you are when you vote. I believe 400,000 bodies buried at Arlington National Cemetery is the reason you should stand for the national anthem. I believe the water won't clear till you get the pigs out of the creek. I believe love is the answer, but you should own a gun just in case. Those are the illustrious Senator John Kennedy from Louisiana. I just think those are interesting. I think that'd be worth pondering. So let's move on. So this is about the first-time homebuyer program that is being offered. I thought that had a header on there. Who qualifies for this first-time homebuyer loan? It is a loan where you don't have to put a down payment down. If you have a down payment, it'll actually pay for your closing cost instead. It's basically an FHA loan, but they grant you the 3.5%. You don't have to pay it back. It's for first-time homebuyers. It's for school district employees. Now, I think that's important because it's not just teachers. It could be administrators. It could be school bus drivers. It could be people that work in the cafeteria. If you have a W-2 that says you work for an independent school district, you will qualify. It's for medical workers. It's for policemen and firemen and firewomen and policewomen and military people and public services. If you work with anybody that works for the city, you will qualify for this loan. And what it is, and one of the biggest reasons that people don't qualify for a home loan is generally about the money. So this gives you a little bit of a leg up. The way that FHA is priced right now, you could get up to about $14,000 with this grant. So if you have any questions about that, I want you to feel free to call me. Again, my number is the 281-348-9899, and you saw that on, and it'll be on one of my other slides. There it is. So now we're going to talk about credit. And in this particular case, this is one mistake. Let me see if I can expand that. I know there's a way to do it. There it is. There we go. So in this particular case, this is a borrower who's got a healthy credit report. He has hardly any lates. Matter of fact, no lates. The result of his credit score, I'm going to show you on the next slide. But what has happened, if you look at this down here, the late dates of 6/22/30. So this shows when he opened the account in April of 22. This is date opened right here. This date of last activity is 6/22. It shows he's got one 30-day late. It was in June of 22. Well, this just turned to be August, but this was just 35, 40 days ago. And so what happened is the guy paid his bill. But when it was paid, and evidently the account number on the payment that he paid went to the wrong account. So they, in fact, returned the money to him and then reported him late. Well, you'd think that that would be a pretty easy thing to resolve, but I want to show you what one late can do to your credit score. So here is the credit score, and you can see his bureau scores up here are 570, 586, and 549. I circled the potential score improvements But even with these potential score improvements, the guy's not, I mean, his credit score was up with his partner here. And you can see they were well into the 700s, which would have qualified them for the absolute best rates. So now, with that one mistake, and it wasn't even, he didn't make a mistake not paying, he just made a mistake with one of the digits on the account number. And the result is that his credit score dropped about 150 points, maybe even more than that, could have been 160 points. And so this is just kind of an example of what you can confront when you're paying your bills and you make a mistake. Or in this case, it could have been the company that made the mistake. And the best thing I can tell you to do is if something like this happens, you should call them immediately. The other thing that I like to point out on here, if we had to do, and we see people's credit scores like this, where there's a big difference in them, like in his middle score is 570. Well, her middle score, and since she's only got 2 scores, is 729. So if we were going to make a loan to this person, what would the lender use of their credit scores? Normally, I'd say, Joe, what do they? Joe would go, well, I guess that it would probably be the lower ones, and that's exactly right, because what they do is they'll use the lower. They're the most conservative of the two, and with a 570 FICO score, there's just not many loans that you're going to get for real estate. So that just lets you know that in some cases there are opportunities for you to just have one borrower as long as they make enough income. But if they were an FHA client, you'd have to use both of the credit scores, and it just makes it harder. And you know what? I said that, and as I'm saying it, I'm going, that's not right. You can do it without using, in an FHA loan, you can do it without using your partner's credit scores, but you do have to include their debt. So in this case, his wife would have to make enough money to cover not only her debt, but it'd have to cover the debt for her husband also. So it just makes it harder. So again, it's a quick mistake, but now you know how couple scores work. So headlines, boy, and crazy headlines today and this last week. And if you can see this picture okay, you can see this is an ice bucket with a house on it, and it indicates that the housing market could be cooling. It's kind of on ice right now. Well, these headlines, I thought they were pretty radical. Is the housing market in a recession? Here's what economists are saying. And then this other one that I saw this morning, prepare yourself. The U.S. housing market is at the beginning stages of the most significant contraction in activity since 2006. Now, I personally think that that's a little overblown. And I don't think, I mean, this would put shivers in anybody that was either getting ready to sell a house or to buy a house, thinking that, and a lot of people, we talked about it a lot early on, was, is there going to be a bubble? Is there going to be a pop in the housing prices? And I personally do not think that that's going to happen. And I go back to the information we talked about last week with Dave Ramsey, and I'm not going to say Dave Ramsey's the top economist of them all, but I believe him. But here's what one of the things that he said from last week: supply and demand. One thing, and the only thing that drives house prices is supply and demand. Anytime there's more supply of something than there is demand, the price goes down. So anytime there's more of a supply of something than there is the demand, the price goes down. Anytime there's more demand for something, a lot of buyers chasing a small supply of goods, the price goes up. So what's happened? Let's just talk about what's happened. Is interest rates have gone up. Now, last year, let's see if I've got that information. Yeah, I do. Housing prices increased by 29% in 2020. In 2019, it was 18%. In 2021, it was probably in that same range. And that does not mean that every area, because real estate, as Joe will tell you, is always local. But home values have increased dramatically beyond what anybody's ever seen in a long time. And except maybe on the West Coast or on the East Coast, but in Texas, it's never been like that. Well, and it's because interest rates were, amazing, and there were just a ton of people moving to Texas, and then the millennials are out there, and they're at that age where they want to buy houses. So you had kind of a combination thing, and then the other part of it is that we haven't kept up with housing. I mean, the builders aren't building enough housing. The people that are selling houses aren't selling like we should, and there's just a glut of buyers. Well, what's happened now is that the interest rates, even though they've gone up double what they were, they're still pretty darn good. But it's caused a lot of people to reconsider their aggressiveness about buying a house right now. And a lot of times they think, oh my gosh, I'm just not sure I can do it. So there's definitely been a tamping down of the crazy desire to buy houses. And that's going to affect home sellers, and it's going to affect home buyers. Now, in home buyers, it's going to be a positive thing. What we're seeing is we're seeing a lot of housing that was still thinking about that 20 and 19 and all these aggressive increases in their house over the course of the last couple of years. And when people are selling them, they still want to reach out to those prices that some other houses in their neighborhood may have sold, or maybe they've even priced it higher than what those houses were. Well, the problem with that is that there's not as many people out there that are willing to pay that right now. And I consider it a normalization of what's going on in the market right now. And gosh, if you're a seller, should you be worried about it a little bit? Well, yeah. What you want to do is you want to put a reasonable price on your house. And you just might not have 14 people line up to make offers the minute that the house goes live on the market. But there's still pent up demand. There's still people out there looking for houses. And I can tell you, we're seeing people buying houses every day. And at our small little shop, we do our share of purchases, and my business is actually doing quite well. So I encourage you not to get too excited and not to get too worried about this. Again, I may be eating those words in 3 months or 4 months, but right now I see things are kind of modulating, if you will, or maybe tempering. I'm not sure what the right word is, to be honest with you, but I think that the thing, it's a time for calm. And I think for buyers, it's a good thing, because you're not going to be paying $50,000 more for a house than it's listed for. And for buyers, just recognize the fact that you're not going to have an offer in 2 minutes after you put the list price on the thing. It may take a week or two. Oh my gosh, would that be crazy? I mean, it wasn't 2 years ago or 3 years ago when houses didn't get worried till about 30 days. So just wanted to make sure that everybody understands that. Some people are freaking out like it's 2008. This is not a 2008 thing. Okay, so just that's kind of my message to you guys, to calm down and to think, that it's still a good thing to own a house. It's still a good thing to buy a house. Houses are still going to appreciate. Now, they may not appreciate at 19 and 20%. They may appreciate at 1 or 2 or 3%, but that's just normal for the real estate market. This is basically a summary of what I just said. Buyers are more discerning because, you know what, there's more houses out there. The cost of buying is stabilizing. Actually, well, we'll talk about that next slide. Less competition for homes. There's less people out there. There's a lot of people that got priced out of it because the interest rates caused them to not be able to afford some houses. Sellers are now negotiating. We're still talking, or we're talking again about people helping you with closing costs. Interest rates, I'll talk about them on the next slide. If you're a seller, you're less likely to go on the market. Well, I get that. I talked to somebody today that said, I'm giving up a 2.5% rate to go to a 4.65 rate and a bigger house. I'm just not sure I want to do it. Well, I'm in the same boat. I'm not sure I want to do it, but I do want to upgrade our housing. So we're going to do it. Why trade a low rate for a higher rate? Well, if you don't have anything better to go to, then don't do it. Okay. But as a seller, be okay with fewer offers. It doesn't take but one. There's not going to be 5 people buy your house. You're just going to sell it to one person. Cash offers are awesome, but make sure they got the cash. We just had a deal where borrower needed to sell their house to buy a new house. They got a cash offer. I'm pretty sure they verified the cash offer. When it came time for the cash offer to come in, it didn't come in. And they kept saying, well, where is it? And he said, oh, we'll have it tomorrow. Well, we'll have it tomorrow. And it kept on tomorrows until 10 days later when they finally said, look, if you ain't got the money, we're not going to do this. And they didn't. The money never came. So just really be sure you got the cash buyers got the money. Stay patient. The market is correcting. There is changes going on, but they benefit particularly buyers. This is really a benefit for the buyers. Okay, so that's that. Today's mortgage rates. Well, today's mortgage rates on a 30-year fixed rate, we're in just right at 5%. And if you come to an aggressive loan officer like myself, you might be in the 4s. And I encourage you to do that. Call me. You can actually fill out an application on KingwoodMortgageGuys.com. You can call me. Don't call me tonight though, because I'm going to the Astros game right after this. But anyway, it was 6% not 3 weeks ago. So rates have come down a little bit. I think that's good news for most people. All right. Last thing also, no, maybe not the last thing, lock and shop. This is where if you're going to buy a house, you get an opportunity to lock in the rate and go out and shop. That way you don't have to worry about this. Now, I will tell you that since rates have come back down, now, I don't know if they're going to stay down. I wish I could tell you, yeah, they kind of started in this direction. They're going to keep going that direction. Well, we can't tell that. The way the market is, the way, the government, the geopolitical environment, the Russians, the Chinese, the Asians in Taiwan. And I mean, and if I offended anybody by saying anything about Russians and Ukrainians and all that kind of stuff, forgive me. Okay. I didn't mean to offend anybody, but there's a lot of things that affect these interest rates that we don't have any control over. And so I'm the first one to tell you that I cannot tell what's going to happen in the future, but I do know that right now, this is a very good time to buy. Interest rates are good historically. They're not as good as they were 3, 4, 5 months ago or for the last couple of years, but they're still pretty darn good. So if you want to do this lock and shop, I think it's a great program. Some people are just floating right now. Well, that's all I've got for today. I know it was a little bit short, and gosh, I needed Joe here to kind of either argue with me or sustain and validate me. But we just hope he gets better. Joe, if you watch, just God bless you, brother, and look forward to seeing you next week and knock that thing out. If you want to contact me, obviously you can get me at 281-348-9899. I'm on the web. You can reach out to me a bunch of different ways. If you want to reach out to Joe, his number is 346-224-4224. Of course, Joe is not only a realtor, but he's an inspector. He's doing on his real estate. He's doing residential, and he's also just started doing commercial stuff. So if you have any of those kind of questions too. But I want to thank you for visiting with me today. Hopefully this information was helpful to you, and I'll see you next week. Thanks a lot. Bye-bye.